The market doesn't care who you are, where you studied, how many degrees you have, or how much capital you have. It only cares about the decisions you make today. If you go in blind, it will take everything away. If you know how to keep discipline, it will give you the opportunity to continue to survive. Those cold words reminded me of the first day I sat in front of the screen. Heart pounding as a red candle just swallowed up the entire small profit. At that moment I realized the harsh truth. Trading is not a game for dreamers, nor is it a stage for thrill seekers. It is where every small decision is instantly paid for in real money and where human nature is most exposed. Greed, fear, pride, and the desire to prove oneself. The book you hold in your hands is not a promise of riches. It doesn't give you the secret key to absolute victory. It is a mirror that forces you to look at yourself. Elder, who was both a psychiatrist and a trader, put everything he observed here. Breakdowns, losing streaks, deadly delusions, and the methods that helped him survive, from individual psychology to crowd psychology, from technical indicators to risk management, from goal setting to journaling. Every piece of the puzzle is present not as a formula but as a journey. I tell you a paradox. The smarter people are, the more likely they are to fail because intelligence breeds the illusion that they can control the market. It is those who are confident that they know the price path that usually lose the most. The survivors are the humble ones who accept that they don't know. And thanks to that, learning how to manage can manage. Capital, emotion, discipline. Have you ever wondered why we are drawn to the market? Is it for money? If it were just about money there would be hundreds of easier ways. Do we turn to trading because it reflects our deepest selves? The need to be challenged, the need to feel alive. And if so, the real question is not how to win but whether we have the courage to face ourselves when we lose. Opening this book, you will enter a world both fascinating and cruel, where knowledge is just a shell, the core is the ability to hold yourself against the storm. Elder does not teach you how to predict. He teaches you how to survive uncertainty, and survival, paradoxically, is victory. So I want to leave you with a question. If the market tomorrow takes away some of your capital, what will you have left to continue believing, discipline or just a new illusion? Please answer honestly. Because that is the beginning of the journey this book invites you to embark on. And before going into the book review, we encourage listeners to buy and read it to fully experience the book's content. Because only when you read this book will you understand the issues I am talking about. Please buy the book and support the author. Now let's start reviewing this book with me. I still remember the first day I sat in front of the flashing price screen. It feels like standing in the middle of a giant marketplace where the cries of buying and selling are constant. I came to trading because of a simple belief. This could be the door to freedom. No more rigid schedules, no more dry orders, just one person and decisions tied to his own destiny. The initial attraction was the fantasy that with a few clicks I could turn thoughts into money, but reality never pandered to that naivety. People often ask why trade, some want to get rich quick, some are passionate about the game, and some simply want to prove their worth. Trading promises many things. Control over time, independence from all superiors. The feeling of playing a live game of chess where the whole world is your opponent. But in that promise there is a trap. When the goal is money, layers of illusion begin to surround people. I have met many people who live by illusions. They believe that all it takes is some secret system, some insider method, and the road to wealth will open up. That belief feeds an entire industry selling secret recipes. From paid newsletters, miracle software to stage talks, in the eyes of a loser. Their failure was not due to poor discipline but due to the lack of a hidden key. It is the most common illusion. Believe that knowledge is out there somewhere. Instead of looking at the chaos within yourself. Another common misconception is that failure comes from lack of capital. People say, if I had more money, I would have endured the storm and won big now. But I have seen many people with millions of dollars disappear in just a few days. Big capital does not cure a young mind. A person with a loss mentality can destroy any account. Whether small or big, the problem is not the size of the assets but the habit of betting too much and lacking principles. There are also those who believe in automatic machines. They crave a system that thinks for them, acts for them so that money flows into their pockets. This belief is as attractive as a child's dream, lying still and waiting for warm milk to flow into their mouths. However, the market is not a gentle mother, it is where the strong take advantage of every loophole to take away the assets of the weak. Any system that is not monitored and adjusted with a sober mind will soon self-destruct. The seller of the system may get rich, but the buyer will suffer the illusion. And then there is the dangerous search for saviors. In the darkest days, many people are willing to hand over their wallets and minds to a self-proclaimed guru. They look for a guide like a child wants to insert its umbilical cord into another body. I have seen many people broken by such promises. When the idol is right, they cheer and bet more. When the idol is wrong, they fall into the abyss and still blame fate. In fact, no one but themselves can save them. Behind all these illusions is a naked truth. Trading is not difficult intellectually. It does not require a mathematical genius or a surgeon, but it requires something much more difficult, the ability to be honest with oneself. Every time we enter the market, we must answer the question, what are we looking for? Is it money, is it thrills, or a way to prove ourselves? The answer is not on the chart but in the deepest motives of the mind. The market does not spare anyone and only those who dare to look into themselves. Only by discarding all excuses and lies can one survive long enough to see the freedom that hang dreams of. Many times in my life, I have turned myself into my own biggest enemy. Not the market, not the sharks, but the moments when I let my impulses lead me. I have witnessed many people entering a transaction with a confident appearance. Then, in just one night, their own hands have strangled their accounts. Self-destruction is a hidden instinct that no one dares to admit, but it creeps into every decision. If you look at a casino, you will immediately understand this mechanism. Gamblers do not go there to get rich. They go to feel alive. The climax of rolling the dice or flipping cards is what makes them addicted. Trading gives them the same drug. The green and red numbers, the unexpected fluctuations, the pings of price quotes. All of them are like a bell calling an addict back to the table and are like gambling. The feeling of excitement pulls them into a spiral that makes them continue to bet even when they are losing. Blood. I once had a talented, intelligent friend who always found a way to sabotage his own achievements. He could build a career and then destroy it, make money and then lose it all. In trading, he repeated the same cycle. A winning streak made him proud, but then a reckless decision wiped it all out. He always had reasons to blame the environment, colleagues, even family, but never looked in the mirror. In the end, his intelligence could not save his habit of pushing himself down the abyss in a psychiatric clinic. I have met people with the syndrome of gambling with fate. They do not care about systems or analysis. They only care about the feeling of winning this time. The market in their eyes is just a bigger table where they can legitimize their addiction with the label of investors. In essence, it is still gambling, just differently. This game is wrapped in intellectual shells, charts, news, fancy terms. The most dangerous thing is when the destruction self-sabotage becomes an unconscious habit. The loser loses more and more, just like a drunkard drinks more and more and can't stop. In panic, they double their positions. They hold on to their losses in the faint hope that just one reversal will save everything, but the market doesn't care about anyone's pleas. It continues to crush anyone who neglects discipline. Unlike most other fields, trading has no safety net in life. If you make a mistake, your colleagues will remind you, your boss will warn you, your friends will pull you back. Here, every mistake is immediately calculated by the market with real money. No one will stop you from running into the wall. Each click of an order is like opening a car door right on the highway. Experienced drivers are just waiting for the opportunity to rip the door open and leave you with a pile of scrap metal. The only way to survive is to be aware that the instinct to self-sabotage is always within us. Those who don't realize this will repeat the same cycle of failure over and over again. I have learned that being strict with yourself is not a luxury but a condition for survival. Writing a diary to record every decision, every cause. That is the only way to clarify the hidden habits that sabotage you. I once advised a trader who was drowning in losses to stop trading for a month, just a month, to see if he could endure it. For a normal person, it is just a break, but for a market addict, it is a sentence of hard labor, a hunger. The urge to place orders shows that he is no longer in control of himself. If a person cannot leave the market for even a short time, it is no longer a profession but a legalized addiction. The market is harsh enough, but when we enter with a self-destructive mindset, it does not need to be strong, we will take care of the rest. And the most painful truth is that many people still want to fail deep down, because that failure reinforces a familiar story for them. I was born unlucky, this world is against me, and I still win. What a paradox is something they dare not face because it forces them to change their entire way of life. I gradually understood that this game is not just math and probability, it is a silent war inside each person. You can own a reasonable trading system, but if you let arrogance or fear get in the way, your account will be devastated quickly. I have seen many people lose not because they do not know how to analyze, but because they do not know how to control themselves. The truth is that the market is complicated enough and it is the mind that makes the game almost impossible when you are winning. It is easy to believe that you are invincible when you are losing. It is easy to believe that a reversal will save everything. Both of these illusions cause you to break your discipline. A short winning streak can push people into a state of ecstasy that makes them ignore a huge trading principle and get slapped in the face. I have seen countless stories of people going from bottom to oil only to go back to bottom faster than the speed at which they were built. I too no exception. In the early days, I had a winning streak. It felt like I had the key to the universe in my hands. And then, just a week later, I lost everything I had just earned. It was not the system's fault, it was my fault. I let my emotions take over my mind. It was then that I began to wonder if I could learn to detach myself from this game. In the process of finding the answer, I suddenly realized a strange similarity. Outside of trading, I still work with patients. People struggling with addiction, I see in them a common denominator with traders. Loss of control, an alcoholic can be sober for a week, just a small craving can make him collapse. A trader is the same, just a moment of lapse of discipline, all the capital can disappear. I remember the first time I attended a meeting of sober people, small room, simple folding chairs. A few people shared their stories. They talked about losses, about feeling of not being able to resist the craving, of deceiving myself. I listened and unconsciously replaced the word magic with loss. And I realized they were speaking for me. That moment opened a new direction for me. If the principles that help alcoholics escape the cycle of repetition, they can also help cheer escape the spiral of loss. The problem is not in the market, nor in the system. The problem is in how we face ourselves. Just as drug addicts must admit their helplessness with alcohol, traders must also admit their helplessness with emotions. Only then will change have a chance to happen. People often think the solution lies in finding more information, tools, new indicators. But the truth is that information cannot cure self-destructive habits, only self-awareness, discipline and control mechanisms can save us. You can spend hours studying charts. But if when the market shakes, you still panic, all knowledge becomes useless. What surprised me most was the strange contradiction. Traders, successful people, are less affected by each trade. They are not elated when they win, nor are they desperate when they lose. They are like swordsmen, focusing only on each movement, each precise cut. Losers, on the other hand, are extremely excited and then collapse to the bottom. They just keep going around and around without ever moving forward. And so, I started to build a rule for myself. When I feel my heart beating fast, when my palms are sweaty, that is the signal not to place an order but to stop. Trading should only come from clarity, not from a state of being drunk on victory or obsessed with loss. Like a diver must control the amount of air in his tank and not gasp for air emotionally. Otherwise, no dive will bring you back to the surface. I have often wondered why drug addicts can find a way to recover while so many traders are still struggling in the spiral of loss. The answer lies in something seemingly simple. They know how to rely on each other. I remember it very clearly. The atmosphere in the first meeting of those who are fighting addiction is an empty room. A few dozen iron chairs, tired faces, determined eyes. They share not to be praised but to remind themselves that they are no longer alone in this fight. The first lesson comes from the so-called bottom. An addict only truly changes when he sees the abyss under his feet. When he is sick, his family is broken, his job is ruined, when there is nowhere left to run, he admits the truth that alcohol is stronger than him. Likewise, most only begin to change after a heavy collapse when the account is almost zero. When the pain becomes an alarm bell, there is a paradox. Sometimes it is the ultimate failure that is the only gift that is enough to open our eyes. The second important principle is that one day at a time, addicts do not promise themselves to quit drinking forever. Because that is too heavy a promise to keep. They just need to be sober today. Just go to bed sober tonight today and then do it again tomorrow. For traders, this approach has a strange power. Don't think about being disciplined all your career. Start by being disciplined in one trade. Then one more. It's the accumulation of days that saves you, not grandiose vows. There are slogans hanging on the walls in meetings that I still remember to this day. It's easy. One day at a time or be sober today. They sound simple at first, but when applied to trading, they become a powerful shield against impulse. You don't have to promise that you will never make a mistake. You just have to promise that this trade today will be executed properly. Another element in the meetings that made me think about the existence of sponsors. Each member has the right to call another person when the urge to drink arises. Just a short conversation is enough to stop them before self-destructing. In trading, we also need our own sponsors, not necessarily one person, but it can be a mechanism. It could be a trading journal, a spreadsheet recording all orders, cold numbers reminding us that if we continue to be impulsive, everything will disappear. I often advise my students to replace the word alcohol in the addict's book with the word loss, and read those lines. You will see that they are talking about themselves. Because once you get caught up in the spiral of recovery, when emotions drive every decision, the difference between an addict and a losing trader almost disappears. I left that meeting with a strange feeling. I knew I was not an alcoholic, but I understood that I was addicted to the market in some way. And like those people, I needed a support system, a set of rules, and most importantly, the humility to admit my helplessness in the face of temptation. Only from that starting point did the road to recovery really open up. When I started using the concept of hidden losers, many people laughed and thought I was too pessimistic. But really it turns out that's another way of calling an addict in the trading world. They're not addicted to alcohol or drugs. They're addicted to the feeling of throwing money into the market. Each loss is like a glass of strong drink, a series of losses is like a continuous drunkenness. The familiar cycle is always the same. A few small winning orders light up the illusion, then a big loss brings it all down. Instead of stopping, they continue trading like drunkards, continue pouring more wine. The more they lose, the more they crave to recover, but the more they try to recover, the deeper the wound, just like an addict. They hide everything, don't take notes, don't look at reports, even tear up the broker's statement, like an alcoholic avoiding a mirror. They're afraid to look at the real numbers, afraid of the truth about themselves. I once met a man who told me that trading brings a pleasure stronger than sex. For him, each time he presses the order button is a dose of high. It sounds scary, but that's the reality of many people. Once crossing the line between taking calculated risks and rushing into gambling, they are no longer gamblers but become investors. What hurts me the most is when I see them looking for miracles to save themselves. It's like an addict looking for a lighter drink to cover up their addiction. Losing traders buy more software, change their system, change their strategy, and follow a new guru. They don't understand that it's just a change of drink, but the essence is still addiction. No method can save someone who hasn't admitted the truth. But I also believe that this disease can be cured like magic addiction. The first step is to admit that I've lost control. A smart trader must dare to stop after a few consecutive losing trades. See it as a signal to rest, to look back. Losers do the opposite. The more they lose, the more they trade. As if the more they drink, the easier it is to sober up. The difference between losers and winners is not intelligence but attitude towards losses. Winners see a losing trade as a small lesson, except losers accept it as part of the game. They take careful notes, learn from it, and move on. Losers see each loss as a humiliation, a blow to their ego. And so they try to prove it by placing bigger, riskier trades. As a result, the wound never heals. I remember being invited to observe a seasoned trader in Texas. He told me, "You won't know if I'm up $2,000 or down $2,000, because I don't let the numbers dictate my mood." That's right. He was calm. Focused on the process rather than the outcome of each trade. Loser addicts are the opposite. A winning trade makes them laugh like drunkards. A losing trade makes them hang their heads in despair. That state of mind signals to the market that they'll soon be swallowed up. If one day you find yourself unable to stop placing trades, even when your account is in free fall, you've entered the danger zone. That addiction is as destructive as any drug and there is only one way out. Accept the truth. Stop and learn to trade with your eyes wide open. There is a truth that few people accept. Prices are not insignificant numbers sliding on the screen, but the heartbeat of a huge crowd every time the price moves. It is the trace of hope, fear, greed and despair of thousands of people. If you do not see the psychology behind those numbers, you are just a blind person groping in the dark. I once entered a real trading floor, where the shouting and the smell of sweat, the ringing of phones, the flying of papers everywhere. It was a chaotic stage where people were no longer individuals. They merged into a collective body, excited together when prices climbed and panicked together when prices fell. The truth is that the crowd always behaves more primitively than the individual. A normal person in real life can be calm. But when entering that flow, he easily turns into a screaming person. That is why the trend formed. Not because of some magical mathematical formula, but because herd mentality amplifies itself. An initial rally is initiated by a small group, but when the crowd sees it, the fear of missing out makes them rush in, pushing the price even higher. Then the opposite happens, the crowd runs away, the price plummets, not for economic reasons alone, but because panic spreads like an epidemic. In the early days, I also believed that I could predict the exact path of prices, but gradually I understood that this was an empty ambition. No one can predict the mood of a crowd of millions. What we can do instead is learn to manage the situation when it happens, like a sailor who cannot control the wind but can adjust the sails. Know when to set sail and when to anchor. When I look at the chart, I no longer see meaningless lines or candles. I see psychological waves. A price level that has leveled off many times is where the crowd feels safe. That is support zone. A level that the price repeatedly fails to surpass is where fear takes over, that is resistance. The chart is a collective mirror. It shows us where people start to panic, where they are filled with hope, and there are special traces like what I call the Kangaroo tail. That is the moment when the price is stretched to the limit in the session and then quickly bounces back to me. It is like a spark. The crowd thinks that the trend will continue, but in fact the opposite force has been silently preparing. The Kangaroo tail shows that psychology is pushed to the extreme, and immediately after that is a reversal. Those moments, if sober enough to realize, can become sharp entry points for individual traders. If you want to survive, you must learn to stand outside the emotional whirlpool of the crowd instead of shouting after the noise. Observe instead of rushing in when everyone is excited. Ask yourself whether we are witnessing the beginning or just the last cheer before the lights go out. The market does not reward the fastest but the most sober after many years. I realize that the trick is not to race against the clock, but to embrace uncertainty. The market is like a wild animal. You never know which way it will pounce. But you can learn to keep your distance, observe the rhythm, and act when the real opportunity arises. That is the art of management, not prediction. Most people enter the market with the obsession of being right. They want to know if the price will go up or down tomorrow, to find a magic formula. Saint to predict the future. But the market doesn't work that way. It's not a guessing game. It is a continuous flow of human psychology. And in that flow, the wisest thing is not to guess, but management. I have seen Baja destroyed by the haunting of predictions. They spend a ton of time plotting, firmly labeling a script, and then throw all their resources into it. When the market does the opposite, they not only lose money but also lose confidence in themselves. Meanwhile, long-term survivors do the opposite. They don't try to guess, they just prepare. If the price goes this way, what do they do? If it turns the other way, what do they do? Instead of trying to be right, they choose to be ready. It was this shift in thinking that opened my eyes to a different way of looking at charts. The lines drawn on it are no longer a maze but a psychological map. A repeated peak is not random. That's where the crowd gets scared. A deep bottom appearing continuously is not by chance. That's where hope comes in. From then on, the concepts of support and resistance became collective psychological milestones rather than just dry numbers. I remember the first time I realized that price is not just a price, it is like footprints left in the sand. Every candle tells a story. Some sold in panic, some bought in greed. And when we look deeper, we see the paths that lead to the trend. Trend is not a line that slopes up or down. It is the common heartbeat of the crowd. Understanding that heartbeat, we know when to go together, when to separate. In particular, there are moments when the market reveals its own extremes. I call them by the image of a kangaroo tail, when a candle extends too far and then turns suddenly. It was a sign that the crowd had just been ignited. They think the trend will continue, so they jump in. But the opposing force was waiting. That long tail is the trail of despair, and right behind it is often opportunity for the patient. I have used those same signals many times to enter orders. Not always right, but enough for me to understand that if you want to read the market, listen to the story it tells, not impose your own story on it. A chart does not say buy or sell. It only whispers that here people were afraid, there they were greedy. The trader's job is to piece together those whispers into a picture clear enough to act on and become more engaged with the market. I realize more and more that humility is a condition of survival. You can't control the crowd, you can only control yourself. You can't force prices to go your way. You can only wait for the price to come to where you have prepared. The moment you understand that, trading is no longer a game of predictions but becomes the art of managing risks and opportunities, from observing yourself to observing the crowd, then to reading the traces that the crowd leaves on the chart. It is 3 layers connected together like concentric circles. And it was in that bond that I found a way not to win forever, but to survive long enough. Because in the market, survival is the greatest victory. I still remember the first time someone asked me, how do you know if a trade is worth entering? The question sounds simple, but hidden within it lies the core of this entire profession. How many people rush to place orders just because they see an up arrow, an unusually long candle, or a hint from a news report, but then they lose money and blame the market? The truth is that not every trade is worth entering, only a carefully selected few are worth betting your time and capital on. To do that, we must first know how to test the system, like testing a bridge before crossing it. You can't set foot on a newly built bridge without trying to shake it. Same goes for trading. Before using any method with real money, you need to test it not once but hundreds of times. On multiple data sets, across multiple contexts. I used to write down pages and pages of price lines. Each result to understand how your system reacts when the market favors you and when it betrays you. And there was a phase that seemed boring but saved my life many times, trading on paper without real money. Just record the decisions as if you were actually placing the orders. Many people disregard this step, thinking it is not real because it lacks emotion. Yes, it does not create fear or greed. But that's why it gives us a clear headspace to see if our system is holding up. If a method doesn't work on paper, bringing it to market is like jumping into a river without knowing how to swim. Over the years, I have come up with 3 essential requirements for any command. First, the overall trend must be clear. I never enter a trade based on a single small signal, detached from the larger context. Just like driving on the road, you need to be aware of the wind and the slope, not just looking at the pothole in front of you. Second, the signals on the shorter time frames must agree. If the large map points north, the detailed map should also show the road unblocked. If 2 maps conflict, it's best to stand still. Third, the entry point must be specific and clear, not ambiguous. I have to know where I come in and moreover where I get out if I go wrong. A trade is only worth entering when there are clear answers to all 3 of those questions. But even with a system in place, tested and validated, there is still a fine line between theory and practice. I have met many people who have a perfect set of rules written on paper, but when faced with real price fluctuations, they throw it all away. They think they are flexible but are really just looking for an excuse to be impulsive. At that time I understood that the system is just the framework, discipline is the lifeblood of it. A system without discipline is like an empty body, ready to collapse at the slightest impact. I remember sitting alone at night looking back at my losing trades, not to torture myself but to dissect which requirement I broke. There were times when I jumped in when the signal only appeared on a small time frame, missing the big trend. I told myself one time, maybe this time is different. Although the long-term map warned otherwise, and each time, the results were unforgiving. The lost money was proof that I had betrayed my own rules. The longer I've been in this profession, the more I believe that chatting is not a thrill-seeking game. It's like the work of a surgeon, cold, disciplined, no shaking hands allowed. Only the patient here is my account. And one wrong cut could cause it to bleed to death. I don't say that to scare you, but to remind you that every command before pressing the button must go through those 3 iron questions. If one is missing, it's better to keep your hand off the mouse. It is in that severity that I find freedom. Because when I know to only choose the orders that are truly worth it, I no longer have to agonize over a series of impulsive decisions. I am no longer dragged down by the market's every little fluctuation. Instead, I proactively choose the moment, like a hunter patiently sitting in the bush. Waiting for the right moment when the prey appears, and when that moment comes, I place the order without hesitation because I know where I am, where to stop if wrong, and where to go if right. I used to be fascinated with the idea that a single chart could tell me everything, one price line. One indicator, one model, that's enough to decide. But then I discovered the deadly trap. The market is like a multi-part piece of music. If we only listen to one instrument, we can easily mistake it for the whole melody, and when we do, we are mistaken. The price to pay is often very high. It was from that experience that I developed a multi-layered approach that I call the triple filter system. Simple yet sharp idea. Never let a single signal dictate your decisions. Put it in the light of the larger time frame and then re-examine it in the smaller frame before acting. Like a map, you need both the big picture and the details. The first filter is the big picture, which could be a weekly or daily view. Where we see the mainstream, if the long-term trend is up, we don't look to short just because of a red candle. Conversely, if the trend is down, trying to buy just for a few recovery sessions is like rowing a boat against the tide. I have paid the price for disregarding this filter many times myself. Just a little bounce was enough to make me mistaken. And ended up being swept away by the big waves. The second filter is the intermediate frame, where the signal starts to become useful. Here I look for consensus with the big trend. If both point in the same direction, I continue. If they conflict, I choose to stay out. This sounds easy but is difficult to practice. Because human instinct always wants to do the opposite. We crave to catch the bottom while the trend is still down. And eager to short while prices were still climbing. It was this second filter that forced me to slow down, that forced me not to let my instincts overwhelm my reason. The third filter is the shortest frame, where I look for the exact entry point. It could be an oscillator signal, a candlestick pattern, or simply a small correction. But the importance is not in the signal itself, but in how it is matched to the two previous filters. It's like taking a detour when you're sure you're going the right way on the highway. I remember a student once asked why it had to be so complicated. Why not use a time frame for speed? This question makes me smile. Because fast is what the market always tempts us, slow is what saves us. A single time frame easily leads us into illusion. While multi-layered coordination forces us to be humble and alert. What I appreciate most about the triple filter system is not that it gives an accurate signal, but that it saves me a lot of bad shots. While the short-term chart looks like a perfect opportunity, the big filter reminds me that this is just a counter-trend swing. Thanks to that, I stayed out for a few days and saw the price crash just as the big flow had signaled. Standing aside is not cowardice. Standing on the sidelines is sometimes the wisest decision in the market. You don't need to win every trade, you just need to avoid the worst ones, and that's the power of the three filters. It doesn't make you a total jerk, but it does make you less blind. And in a game where death comes from blindness, just seeing a little clearer is enough to survive long term. There are times when the market is neither bullish nor bearish, it is more like a living thing breathing. We see its heartbeat through the expansion and contraction of the price. The problem is knowing when to go with the flow and when to back off. From that question, I built another tool. What I call the momentum system. Momentum is not trend. Trend is like a river flowing in one direction. Momentum is the speed of the water flow. Sometimes the river still flows forward but more slowly. Signal of danger of change of current. There are times when it rolls over and sweeps away all obstacles, showing that this is a time when we can follow without fear of getting stuck in the middle of the stream. The momentum system was born to measure that very speed. I decided to encode momentum with clear signals so that emotions had no room to interfere. The colors are simple but stark. When both trend and momentum are in the same direction, that is the signal to go with. When one of the two weakens, it is a signal to stop. This combination may sound dry, but for me, it is the antidote to self-deception. I have seen so many people go bankrupt just because of signal bending. They see the forest alarm system but still tell themselves this time is different. They see the warning color but tell themselves to just try one more command. At times like these, the market doesn't need to be so cruel, they rush in and hacksaw. I've been there too, and each time the price was a part of my capital, even my confidence. But as I learned to follow the signals, something strange happened. I no longer have to struggle internally every minute. The color tells me, go ahead or stop. No more tiring negotiations with yourself, no more shaking while placing orders. I let the system be the gatekeeper. As for me, I just need to do my duty as a soldier, once and for all. During a strong bullish move my system switched signals from green to yellow. Everything outside says the market can still climb. Friends called to ask if I had bought more. But the yellow signal means momentum has slowed. I stand outside. Just 2 days later, prices crashed, sweeping away the bullish enthusiasts. I'm not gloating, I'm just relieved because I know if it weren't for the system, I would have been one of them. What I learned after all is that traders don't need to be smarter than others, but need to be more honest with themselves. Honestly, I'm not good at reading temporary emotions. Honestly, it's easy to get caught up in the crowd. And that's why we need a cold tool detached enough from our ego to remind us when to act and when to sit still. The momentum system does not make me invincible. It's just one thing. Keeping me out of the most dangerous positions, the moments when I am most vulnerable, and sometimes in a world where losses are always lurking. Just avoiding fatal mistakes is enough to move forward. I often imagine price as a river. It has a left bank and a right bank. Sometimes the water is full, sometimes it dries up to reveal the bottom. As we learn to read the margins of that flow, we begin to see opportunities that others miss. That is the idea behind the price channel system. Don't try to guess where the river will go, but observe how it hits the banks, bounces back and creates rhythms. A price channel is drawn from 2 parallel lines. Above is the resistance line, below is the support line. The real meanings are not in the 2 lines but in how people react around them. Every time the price hits the upper limit, the excitement reaches its peak. Then suppressed. Each time the lower shore is touched, despair rises and is relieved. Those 2 banks are not lines on paper but the amplitude of collective psychology. The hardest part about using price channels is not to turn them into traps. How many people see the price break the upper limit and rush in only to get drowned when the price turns around? How many people short when price breaks the lower band and then get angry when it bounces back? The truth is that there is no permanent shore. The channel only exists as long as the crowd psychology repeats itself in a pattern. When beliefs change, the river changes course, breaking all old banks. I remember a period when the price fluctuated within the channel for many months, each time touching the upper edge. I patiently waited for signs of weakness and then sold. Every time I hit the bottom I wait for the bounce and buy. These are deals that don't require fancy, just patience. But one day the price broke above, I knew the flow was different. Many people still cling to the old channel, believing it will return. They do not understand that when collective beliefs change, old maps become meaningless. What I learned is that price channels are not for prediction but for behavior management. It forces us to be patient, forces us to wait for the right moment, forces us not to rush into the middle of the river. It also reminds us of the impermanence of all models. Use what is still suitable, discard what is broken, nothing is permanent. And clinging is the cause of many painful losses. With the price channel system, I complete the necessary toolkit. Multi-layered screening to see the big picture, momentum system to know speed and price channels to understand rhythm. These three tools don't promise a path of roses, but they give me a solid enough map to navigate the chaos. Once we have the skeleton of the system, the next question is, where do we take it? Because the market doesn't just come in one form, there are stocks, there are ETFs, there are options, there are futures, there is Forex. Each tool is like a different kind of medium. Bicycles, motorbikes, cars, boats, each takes us places. But speed, risk and cost are not the same. That's when I started looking at each tool not only to understand how it worked, but also to understand the psychological trap it set for its users. Every trading instrument is like a vehicle, some are slow, some are fast, some look shiny on the outside but inside are at risk of exploding at any moment. It's not about choosing the coolest car, it's about knowing what you can handle. Stocks are the oldest vehicle. Like a familiar warhorse, it is possessive. When you buy stocks, you actually own a piece of the business. It allows you to go along with the long-term development, benefiting from dividends, from growth. But stocks can be sluggish, and if you're just looking for short-term excitement, it can easily leave you disappointed. The trap of stocks lies in that too many people believe that holding is synonymous with safety. But I have seen even giants fall one day, leaving ruins for those who dream of permanence. ETFs emerge as a collective vehicle. You don't ride one horse, you ride a team. It bundles many stocks into one basket, giving us diversity. The advantage is reduced individual risk, the disadvantage is slower speed, lack of breakthrough. Many people use ETFs as a way to participate in the market without too many options. But if you're looking for explosive growth, ETFs are unlikely to satisfy. It's like a bus, safer than a motorbike but can't go fast. Options are a completely different creature, like a double-edged sword or a dose of dynamite. It allows you to control a large amount of stocks with a small capital, and the profits can be magnified many times. But at the same time, one wrong step, you lose all the options that are alluring because of the promise of quick riches. But that is precisely why it feeds insatiable greed. I have seen people become millionaires in a few weeks with options and then go bankrupt in a few days because of a reversal. CFD contracts for difference are heavily advertised. But in fact, the car is equipped with a turbocharged engine for people who do not have a driver's license. It allows betting on volatility without owning the asset. With high leverage. It sounds appealing, but the price is you can burn out after just one session. Many brokers like to push CFDs onto the inexperienced because they know they will soon be paying for their education. FUT futures are powerful vehicles but require steady hands. It allows betting on commodities, interest rate indices on a large scale. This market is 24/7, competitive, and discipline is stronger here than anywhere else. Those who despise futurists often leave in pain. And Forex currency market is like a giant sea. It is vast, with near infinite liquidity, attracting both central banks and retail traders. Forex is fascinating because it is always open, always moving, as if there is always a possibility. But it is this very vastness that makes it a place full of pitfalls. How many ads promise to get rich from Forex? But in reality, most people who enter are swept away from the shore in the first wave. Each tool has its own charms and pitfalls. It is not important to choose which tool wins, but to choose the tool that suits your psychology. Capital and self-discipline. I used to tell my students, don't let the market decide your means. Choose a medium you truly understand and can control. Because on this journey, you don't need the fastest car, you need the car that can take you the farthest. From understanding the tools, I move on to the more core issue. How to stay alive on the journey, because any vehicle is meaningless if the driver does not know how to control the speed, does not know when to brake. That's where the story turns to risk management. If there is one word that defines longevity in this profession, it is risk. No one goes bankrupt because of lack of opportunities, but because of not knowing how to control the price of each opportunity. The market doesn't kill you with a knife instantly. It wears you down with hundreds of tiny cuts until you get exhausted and give up. I have met quite a few people. Each of their orders is like a gamble. They bet their entire account or at least more than they can afford. Once the market turns around, they not only lose money but also lose their composure. And when you lose your cool, stupid decisions come one after another like dominoes. At that stage, trading is no longer about risk management but about people management risk. The first thing to remember, trading is a game of probability, not certainty. Even a great system is not correct more than 6,070% of the time. Meaning there will always be losses. If you take every losing trade as an insult, you will soon be emotionally destroyed. The only way to survive is to accept losing as a natural part of the game. Just like doctors accept that not every surgery is successful. I set myself 2 core principles. Rule number 1, don't let a single order seriously damage your account. Second rule, don't let a losing streak ruin your entire career. Sounds obvious, but just look around. You will find that most of the people who leave the market have broken both of these principles. From 2 principles I wrote the law. The 2% rule. Each order should not risk more than 2% of total account. This means if your account has 100,000 then the maximum loss for one order is only 2,000, no more, no exceptions. Some may find this law too restrictive, but it is that very restriction that protects you from disaster. One wrong command never kills you. Then comes the 6% rule in 1 month. If the total number of losing orders exceeds 6% of capital, stop, do not place more orders, do not recoup, rest, observe, and regain your composure. Like a pilot when the warning light flashes, he must bring the plane down, not blindly accelerate. The 6% rule not only protects your money, it also protects your mind. Because lost money can be recovered, but lost discipline is usually a one-way street. I once fell into a losing streak. Each command complies with 2% but adds up. I have reached the 6% threshold. I stop. My friends laughed at me, saying I was such a coward. A few weeks later, the market was in turmoil, with prices fluctuating wildly. If I had stayed, I would have lost twice as much. When the storm passed, I returned to my original capital, while many others disappeared. That's when I understood that stopping is also a form of victory. But perhaps the most important lesson is that you can come back from a loss. The market doesn't remember who you were yesterday, it doesn't care how much you lost. The only thing it reacts to is the decisions you make today. Many succumb to the belief that a bad chain of command means a life sentence. The truth is the opposite. It's how you behave after a loss that defines whether you're a loser or a survivor. The art of trading is not in avoiding losses but in losing in a controlled manner. Keep the wound small enough to keep you standing. Because in this game, the last man standing is the real winner. We fail not because of lack of method but because of lack of attention to seemingly small details. Most traders are so engrossed in hunting for buy and sell signals that they neglect the most basic operations. How to set goals, how to stop loss, how to record what has been done. But it's the little things that are the final barrier between life and death for your account. I always start with a question of how much is enough. Ambition is a double-edged sword, a winning trade can turn into a loss just because we want a little more. I learned to set specific profit goals, not too far-fetched but not too modest. Setting a goal is like timing a bomb to that point, I'm out. No matter how much greed still drives me, enough is the key word and it frees me from the endless cycle of greed. Next is stop loss. I think of stop loss as the brake in the car. No one wants to step on the brake, but no one dares drive without it. Stop loss must be determined before placing the order. Never leave hoping the price will turn around. Every time I break this rule, the market punishes me. Not a second too late. Stop loss is not to lose but to ensure you have capital for tomorrow. Another concept I always wonder, is this a type of command? Meaning, does it really meet all my standards? Or just impatience in disguise? If the answer is not a definite yes, then I pass. Because in the market opportunity is never last. Ignoring a bad order is making room for a better one. Daily opportunity scanning also becomes a habit. I don't wait for the market to deliver a surprise gift. I actively check, select and eliminate. Every evening I go through the list of dozens of codes, making a note of a few possible names. It's a boring job. But it is that very blandness that brings preparation and in the market. He who prepares always has an advantage over he who reacts. But all of the above would be worthless if we did not keep track. I keep a trading journal for each order. Please state the reason. Stop, exit, outcome and emotion. When you press the button, read them again. I saw a mirror that does not lie. There were times when I lost not because of the system but because I was impatient. There are times when you win not because you are good but because of luck. Without a diary, I would continue to fool myself. I also plan my trading for each day and then score myself at the end of the day. Not to praise or blame myself but to practice discipline. Each score is a reminder. Did I do what I set out to do? Do I let emotions get in the way? And every day, win or lose, I try to make the next day a little better. This work sounds dry, but it is this that creates perseverance. You can win big once by luck. But to last for years, you have to rely on these little details. No one is going to clap for you for keeping a diary. No one is giving you credit for placing your stop loss in the right place. But it's those quiet actions that keep you going when the loud ones have disappeared from the game. I understand that trading is not just about analysis or prediction. It is a journey of self-training, system testing, tool selection, risk control down to the smallest detail of stop-loss target. Diary. All of which creates a network of protection, and in a world where uncertainty is the only law. That network is the last shield to keep you going. As I close this book, I often wondered what makes a person enter the market and stay in it. Not capital, nor super intelligence. What keeps them going is their ability to face themselves, to face their illusions, their addictions, their moments of weakness that everyone has. The biggest lesson I took away was that the market doesn't care who you are, it doesn't care about your past. It just reacts to the decisions you make today. If you lack discipline, it will take away your capital. If you are patient, it will give you more opportunities. If you dare to take notes and look back at your mistakes, it will give you the opportunity to grow. Survival is not by a magic system but by habits of humility and perseverance. The question I leave you with is, what are you really looking for when you enter the market? Money, freedom, or a way to prove yourself? And if you are honest with your answer, are you willing to let go of illusions to protect what is most important, your long-term survival? Thank you for joining me on this journey. I believe that no matter where you are on your trading journey, there are still lessons waiting ahead. Keep yourself alert, patient, and keep a diary as your companion.